Everybody wants the property unicorn, strong capital growth and positive cash flow. But can one suburb actually deliver both, or is that just investor fantasy? The answer might surprise you, because it's not really about the suburb, it's about how you read it. Hello everyone, I'm Kate Hill, and if you're ready to build real wealth through smart, no-nonsense property decisions, you are in the right place. Today we are going to dive into the one suburb strategy. Does it actually deliver capital growth and cash flow? So let's address the big question up front. Is there one suburb that can give you both awesome capital growth and a very strong cash flow? The short answer, rarely. But it also depends on what you mean by strong cash flow. That is actually a different figure for everyone. Most suburbs tend to lean one way or the other. High growth areas often come with tighter yields and higher entry prices. Cash flow markets, on the other hand, usually exist in perhaps the more affordable regions where growth can be a little bit slower or less consistent. But that doesn't mean you can't achieve both outcomes. It just means you need to be more strategic about how you approach it. If you are finding all my content helpful, then please do hit subscribe. I share lots of strategies and insights to help you grow long-term wealth through smart property investing. Many investors go hunting for a magic suburb that ticks every box. They scroll listings, compare yields, try to reverse engineer the perfect outcome. But the problem is that they are looking at the result, not the drivers. Growth and cash flow don't come from luck. They come from understanding demand, supply constraints, infrastructure, and the type of tenant or buyer the area attracts. Without that context, you are chasing numbers on a screen. Instead of trying to find one suburb that does everything, smart investors focus on alignment. They look for locations where there is clear population growth, infrastructure is improving accessibility and desirability, owner-occupier demand is strong, rental demand is consistent and tightening. In some cases, these fundamentals overlap, and that is where you can start to see both growth and yield working together. But it's not accidental, it's intentional. So here's the part most people miss. Even within the same suburb, outcomes can vary dramatically depending on the property type. A well-positioned house in a high-demand pocket will attract strong owner-occupier competition, which drives growth, while also appealing to tenants, which supports rent. Meanwhile, a poorly selected property in the same suburb might underperform on both fronts, and this is why strategy isn't just about where you buy, it's about what you buy within that location. So can one suburb deliver both? Yes, but only under the right conditions. You're looking for what I call the balanced market, where demand is rising, supply is controlled, and both buyers and renters are active. These are often found in those emerging growth corridors, infrastructure-linked regions and areas undergoing demographic change. But even then, it requires really careful selection, of course, because the difference between a high-performing asset and an average one and the same suburb, in the same suburb, can be massive. So stop looking for the perfect suburb, start looking for the right strategy. When you understand the fundamentals, demand, infrastructure, population, property type, you can position yourself to achieve both capital growth and cash flow over time. And that's how portfolios are actually built. If you want help identifying locations that align with your goals, not just what's trending, then call me and let's build this portfolio properly. Thank you so much for watching. If you are serious about building wealth through property decisions, stick around. There is a lot here to support your journey, and I will see you in the next video. Bye.